Well, this one from today has me really scratching my head because we're talking about the big banks now. JP Morgan, Goldman Sachs. Big dollars, billions of dollars. Another basically for what I'm reading junk, right, category company. So another, darling kind of the AI boom, Coreweave. All right, I'm going to share two stories with you. The first one is from Bloomberg. The second one is from Yahoo Finance, and I'm going to pepper it with some statistics that I've pulled together in between to hopefully drive the point home how serious this continues to get in this private credit fiasco. So the first story, before I jump in, as I always humbly ask, if you haven't subscribed to the channel, please hit the subscribe button for me so we can keep growing the community. I do appreciate all of you, and welcome to all of the new subscribers that have come over in the past couple of weeks. So out of Bloomberg, Coreweave tied data center debt tests strength of flooded market. Coreweave tied data center debt tests strength of flooded market. Debt investors are taking a more cautious view of the latest junk bond deal aimed at funding data center construction. As you know, that's all the rave right now, right? Trillions of dollars are earmarked supposedly for construction of AI data centers to be able to handle the capacity of all this AI that's supposedly going to transform the world. Debt investors, basically it says as of early Wednesday afternoon, Applied Digital Corp had received about $2 billion of orders on a $2.35 billion bond offering that is expected to be sold on Thursday, according to people with knowledge of the matter. Remember the Milligan days? Go back and that was even a little bit before my time in terms of me paying attention. But remember the junk bond king? While the deal is still on track to wrap up successfully, it's lacking the fervor that investors showed in recent transactions for TeraWulf Inc. and Cipher Mining, which relied on a backstop of Google parent Alphabet Inc. to give buyers more comfort. Applied Digital's debt sales seem by investors as riskier than those other two I just mentioned because of its reliance on, here we go, speculative grade Coreweave Inc. as the main tenant. The people said, asking not to be named, discussing a private transaction. So on the ones that got a little more attention, Alphabet Inc., Google is going to be supposedly the tenant in these AI centers. This one is speculative grade Coreweave. The offering has tested the strength of a market being flooded with debt to fund the compute capacity needed to support the artificial intelligence frenzy. Building out data center capacity is estimated to cost, here we go, at least $5 trillion and will require hyperscalers to turn to every corner of capital markets, according to a recent report by JP Morgan Chase. And I'm going to share with you the JP Morgan Chase cash infusion. It's interesting, and then the next story. It's interesting that they say that it's going to require, the amount of cash will require hyperscalers to turn to every corner of capital markets, which is concentration and risk. And by the way, I saw something about Michael Burry coming out the other day and doing about 2 days ago about how these hyperscalers are, from his perspective, manipulating their revenues. There's an article on that. I haven't pulled it and read it, but you might want to research that on your own. Applied Digital is highly dependent upon Coreweave, which we estimate, according to the author, will contribute about 2/3 of total contracted earnings, S&P wrote. With such a level of concentration is a key risk. Coreweave is expected to meet its lease obligations for the next several years, given its growing role in the ecosystem, serving leading AI players such as Microsoft Corporation, the credit rating firm added, the S&P credit rating firm. Applied Digital lacks a special backstop, and its counterparty Coreweave is rated junk which is reflected in more expensive pricing. Coreweave recently sold a high-yield bond in July for uses including refinancing debt. The note, which priced at par, promissory note, is now trading at 96 cents on the dollar, according to Trace pricing data. Did a story yesterday, I think the day before, where I shared some statistics about if these notes trade close to 80 cents on the dollar. If they get down that range, 82 cents, it basically means that they're done. The chances, the likelihood of them defaulting is like 70%. Real quickly, before I share some stuff about Coreweave, okay? There's their stock right now. Now, granted, today was a big down day, but this is Coreweave stock going back 5 days, okay? Between 5 and 10 days. Look where it was, guys. It was $110, something like that. Look where it's at right now. Had a big drop today, but it's gone down a lot. It is moving in the wrong direction. And again, I want you to listen to all this. I'm going to share with you what JP Morgan and Goldman Sachs are doing in response. So real quickly about Coreweave. This is out of Yahoo Finance. They claim to be the essential cloud for AI, built for pioneers by pioneers. Coreweave delivers a platform of technology, tools, and teams that enables innovators to move at the pace of innovation. Okay, building and scaling AI with confidence. Trusted by leading AI labs, startups, and global enterprises, Coreweave serves as a force multiplier by combining superior infrastructure performance with deep digital expertise to accelerate breakthroughs. Established in 2017, Coreweave completed its public listing on the NASDAQ. Trades under the ticker CRWV in just March of this year. So you would think, wow, they're a big player, pioneer, okay? Pioneers leading pioneers. So here's what ChatGPT has about stats, revenues, earnings on Coreweave. Despite strong revenue growth, the company is not profitable. Large losses and high capital expenditures, that's according to Yahoo Finance. They revised downward their full-year revenue guidance to 5.05 to 5.15 billion from a prior higher target, citing delays in a data center build-out. That's out of Reuters. The share price fell 9 to 10% after those headlines, despite the beat, suggesting market concerns about execution risk and, here we go, valuation. The company reported a GAAP net loss per share of minus 22 cents for Q3 of 2025. Its trailing 12-month EPS, earnings per share, is deeply negative, around negative $3.71, according to one source citing out of Macro Trends. One broker, quote, notes a price to earnings PE ratio of minus 47 for the stock. Okay, so basically they're making no money. They're not doing anything, okay? They're just eating up debt. So on the heels of everything I just shared with you, the risk, investors not having a lot of confidence, calling Coreweave basically junk bond type or junk rated company. Here's out of Yahoo Finance yesterday afternoon. Coreweave expands its revolving credit facility to $2.5 billion. It's almost unbelievable. Coreweave Inc., the essential cloud for AI today, announced that it entered into an agreement to increase its revolving credit facility from $1.5 billion to $2.5 billion and extend the maturity date from May 2028 to November 2029. So take on more, let's say, available debt, okay, credit facility, and kick the due date down the road a year, where we've been discussing this type of extensions on finance repeatedly on the show. The amended agreement provides enhanced flexibility and enables Coreweave to support its growth initiatives. And what it's probably doing is the amended loan agreement is probably keeping them out of default status. And instead of putting them in default status, the lenders have decided to give them more money, $1 billion more. So who do you think the lenders are? The facility, they call it, right? The additional loan. Sorry about the sun coming in my window here, right on my face. So the additional loan or facility is led by J.P. Morgan Chase Bank, Goldman Sachs, Morgan Stanley, with participation from Citibank, Credit Agricole, Deutsche Bank, Sumitomo Mitsui Banking Corporation, and Wells Fargo. So think about that list. They're basically contributing an additional billion-dollar line to Coreweave, a company that is losing money. The facility underscores the ongoing confidence, it says, in our differentiated business model and provides us with additional flexibility to execute on the tremendous growth roadmap ahead, said co-founder and chief development officer at Coreweave. Okay, so provides an additional flexibility, basically, of not potential, I guess, revealing a default on their existing obligations. I'm just surmising that. I don't have evidence to back that up. We value the partnership with our banking partners. The financing expansion demonstrates their leadership in the evolving AI landscape and acknowledges Coreweave's strong credit profile and growth prospects. So again, they're probably in decent standing or good standing on their existing credit facility now. Or they wouldn't be getting another $1 billion. We can is that even safe to assume now in this wacko, upside down everything finance world? I don't know. But the point is that everybody, the JP Morgans, all these junk rated type AI situations, zombie companies, everybody's betting on the future. But they've got to come up with $5 trillion, right, to build these facilities before they start making money. So I don't want to go too long today. Coreweave, JP Morgan, Goldman Sachs, Wells Fargo, another $1 billion out there, okay? But we're talking about AI. This is another, private credit transaction, okay? And again, we have to see where this goes. But it's the big banks, the too big to fail, is involved in this one. Thanks for watching. And if you enjoy the content, leave me a like. If you're not subscribed, hit the subscribe button for me so we can keep growing the community. Leave your thoughts and comments. With that being said, I will talk to you soon. Bye.